All right, what's going on, Real Driven fam? Nick here, and welcome to another video. In today's lesson, I will be sharing 5 things that I wish I knew when I got started on my trading journey. These things would have saved me a ton of time, a ton of money, a ton of energy, and a lot of frustration. Okay, so my goal of this video is to share these lessons with you in hopes to smooth out the start of your journey and to help you avoid a lot of mistakes that I personally made. So if you're new to this channel, my name is Nick Updike. I am a full-time day trader and the founder of Driven Investors, which is an education platform and community really geared towards helping young professionals and entrepreneurs level up financially, learn about financial literacy, learn how to build wealth, learn about trading, investing, personal finance, credit, all of that good stuff. And all I ask for this free value is that if you do find value in this, if you learn something, please share with a friend, give it a like, give it a subscribe, all of that good stuff. And with that being said, time is valuable. Let's go ahead and hop into this presentation I made. All right, so point number 1 is start small and scale up as you go. Guys, this literally would have saved me tens of thousands of dollars. Okay, I'll just give you a tiny little backstory. When I first started trading, I started trading with a full-size margin account. Terrible idea. I had no idea what I was doing, but I started in a bull market. The market was pretty much going straight up. And, I made a lot of money really fast. I got cocky. I got a little bit arrogant. And I lost that money just as fast as I made it because I didn't have a good strategy. I didn't have a game plan. I didn't know how to identify great setups. I didn't have a risk management strategy in place. Okay. So something I teach all of my students is, depending on your income right now, either start with a paper trading account, or if you can afford to, start with a small account size, 1 to 5K, depending on your income, and learn that way. You're going to make a ton of mistakes when you're starting out. Every beginner does. Would you rather make all those mistakes with fake money or a little bit of money, or would you rather make those mistakes with thousands of dollars, right? So what's amazing about starting with a small account is that you can practice your trading plan. You can master your strategy. You can review your trades and learn where you're making your mistakes. And you can practice being consistent, following your trading rules, and executing on your game plan. Okay, so that's the most important, is really just building those good trading habits with a small account or paper trading account before you go full size. Another thing is I see way too many beginning traders scale up too fast. Okay, I know it's tempting. Maybe you're trading with the community or you're trading by yourself and you have, a week's worth of great trading. Well, good shit. But the problem is you trade good for a week and you think it's okay to just size up from like $200 to start taking $750 or $1,000 position sizes. And the reason this is a pretty bad idea is because you're emotionally not ready for this. Okay. And what I mean by that is if you start taking $200 sizes and say you're using, 20% loss or 25% loss, and you're used to stopping out at $50, right? Now you're trading with $1,000 size. When the trade goes against you and it pulls back, now instead of being down $50, you're down $250, right? And unless this is a very minuscule amount of money for you and it doesn't bother you emotionally, that difference between the $50 and the $250 usually throws people off, right? It causes them to either exit positions early before the chart tells them to. They actually hold on to positions longer because they're afraid of actually taking that loss, and then they end up digging themselves into a deeper hole. There's all kinds of trading errors that come into this. So what I personally recommend is something called the staircase method. So if you're trading well with $200 size, then next week maybe size up to $300 or $350 on good setups. You trade well at $350 for a while, size up to $500 or $600 on good setups, and slowly increase that amount, right? You're basically raising the temperature of your thermostat. You're adapting to using that amount. You're adapting to seeing those drawdowns and how they affect you. It's going to help a ton. I promise you guys. This is what I did after I already lost a ton of money. And I still do it. I still do the staircase method. I still size up, but I increase over time. Okay. So I think that's going to help you a lot. And that is number 1. All right. So tip number 2, guys, and this is especially important for beginners, is focus on your progress, not your profits. Okay. I know it's really tempting when you're first starting. You're obviously starting to trade because you want to make some money. I'm sure you guys see a ton of IG influencers and YouTubers like myself just posting big P&Ls, and you want that for yourself. Okay. That's why I started trading too. I understand and I get it. But I promise you, there's going to be a lot more problems that come into play when you're just focusing on the profit, on the money. Okay. So I'm going to run through a few of the things that you should be focusing on and why focusing on the profit in the P&L first can really screw you up. So before I go on to the things that you should be focusing on, I do just want to hit on the fact that trading is not a get rich quick scheme, guys. It really isn't. And if that's your primary focus when you're starting, is to just make money really fast, you're going to be in for a rude awakening and you're probably going to get rocked. Okay. So what you should be focusing on instead of just making a lot of money really fast is executing on your trading plan. You should always have a trading plan before you even sit down at your computer, which I'll actually go through, I think, later in this video. And you should be focusing on following your trading rules, right? I would probably say that 75 to 80% of the reason people fail at trading is because they're unable to stick to their trading rules. They don't have good trader psychology and they don't have a good mindset. Okay. But if you can practice sticking to your trading rules and making progress over time, then you're going to automatically start seeing more profits come in. It's kind of this ironic thing, right? When you're not focusing on the money, you make more money because you're focusing on the system, you're focusing on the strategies and the things that will get you to a place where you can consistently be profitable. All right. So just take it from someone who started to make money really fast. Like I said, I lost all of it even faster because I was focused on the money. I was trading with my ego and I was not trading with a strategy and for the purpose of making progress in my actual trading. Now, this did shift really fast for me because when you lose a lot of money, it hurts. I lost $22,000 in one day, probably 2 months into trading. And that shit, it wakes you up fast, guys. It really does. And you're going to have to come and make a decision whether you want to start following your rules and getting serious about trading, or if you're going to be basically gambling. Okay. It's something that most traders come to. A lot of my students end up hitting this point in their trader journey where they're losing money because they're not following their rules or trading emotionally. And they have to sit down with themselves and decide, is this for me? Can I follow my rules? And do I want to put in the work to not only learn all the strategies, but to get myself right emotionally, mentally? Okay. So I know it's kind of intense, but it's just the facts. And you guys really have to take this part seriously. Okay. So again, focus on your trading plan, focus on your trading rules, focus on making consistent progress, and focus on learning about yourself emotionally and learning about your trading personality, which kind of comes into keeping a trading journal. If you're not keeping a trading journal, honestly, you're probably not a very serious trader. Okay. And you're not ever going to reach the level of potential that you could if you did. Keeping a trading journal, you're going to learn, you're going to be able to see all your analytics. You're going to be able to see the setups you took. You're going to be able to identify all the mistakes you made. You're going to be able to spot habits and tendencies that you have. You'll be able to actually go back and see where you were emotionally when you took the trade. Okay. So keeping a trading journal is a must if you want to become a serious trader. All right. So those are the main things you should focus on instead of the profits. And then, like I said, trading is not a get rich quick skill set. It's a great way to lose a lot of money fast, though, if you have that mindset. So focus on building good trading habits and the money will always follow. And again, when you're focusing strictly on the money, your ego is in control. And the problem with this is that when your ego is behind your decisions, you're going to make a lot of emotional trading errors. You're not going to want to take losses. You're going to probably get a little greedy, hold on to trades too long. There's going to be all kinds of errors that will come from trading with your ego. I've been through it before. I understand. I see my students go through it all the time. And it's just something I want you guys to be aware of off the bat. You may have to learn it firsthand by yourself. Sometimes you have to learn the hard way, but this is a real thing and something that a lot of traders struggle with. So I wanted to bring that up. So I already got a little bit ahead of myself and started talking about the trading journal, but keeping a trading journal is going to speed up your learning curve tremendously. It's going to help you identify your trading personality and your emotional tendencies. Like, what kind of trader are you? What kind of setups do you trade best? All of those different things and criteria. It's going to help you find your edge, right? Your setups. What setups do you trade the best? What setups are you most profitable trading? And it's going to really help you figure out your most common mistakes and how you can actually tweak your trading to improve on those. Okay, so I can't harp on keeping a trading journal enough. It's been a cornerstone of my success and my development as a trader. So I highly recommend that. TradeZella or TraderSync. I'm actually just starting to use TraderZella, but TraderSync is a great one as well. And let's move on to number 3. Number 3 is protect your downside. All right. This is another thing that a lot of new traders kind of forget. They're so excited about the profit potential they can make that they totally dismiss the fact that a huge portion of trading is really managing your risks, right? Cutting your losers short, letting your winners ride. All right. So always have a risk management strategy in place. Always, always, always. You can have 7 good trades out of 10, but the 3 you lose, if you're not managing your risk, you're going to wipe out all your profits and most likely more. Okay, I see this all the time. Traders will be super consistent, maybe 3-4 days in a row. Then they'll go on tilt their last day because they take 1 or 2 bad trades, but they don't manage their risk, and it just wipes out their profit for the week. All right, we do not want that. I'd rather see you have a 65% hit rate, winning 65% of your trades, but managing your risk really well on the trades you lose and still being profitable than having a 90% hit rate, but the 10% that you lose, you're just, they're complete losers. You're letting them go 100%, right? Okay, so managing your risk is huge. Cutting your losers fast is huge. I know this can be really tough. You don't want to take the loss. It's a painful experience, but it's a part of trading. Every single trader needs to understand that you are inherently putting on risk every single trade you take, and you can't be afraid to lose money because it's a part of the game. It's like being afraid to strike out. If you're an MLB baseball player, you're going to strike out probably more than 7 out of 10 times, right? But you can still be a great baseball player and you can still be a very profitable trader as long as you know how to manage your risk. So I pretty much hit on this, but trading is a game of probabilities. You need to learn how to be emotionless, right? You need to be a robot. You need to be mechanical. You got to follow your system. And even though your mind and everything's telling you like, but dude, it's definitely going to bounce here. Like there's no way the Qs go more than 3% negative for the day. Follow your trading plan. If you told yourself you were going to stop out at this level and you don't stop out, dude, you do that over and over and over again, and you're going to dig yourself in a really deep hole and be in a bad place. Okay. So follow your trading plan, stop trading with your emotions, be mechanical, and understand trading is a game of probabilities. You're going to lose money. It's all a part of the process. All right, cool. So lesson number 4 here. Where are you? There you are. Number 4, kind of touched on this, but you always need to have a plan. Always, always, always. So before you even consider taking a trade, you really need to have the following defined, right? So a trading plan and thesis for 1 to 5 tickers, it depends what you're trading. If you're trading futures, ES, oil, NQ, whatever it is, then yeah, have your plan for those. I personally trade primarily options. So I'm trading mostly, different stocks, and I trade the indexes as well, but you need to have a game plan for them, right? What levels are you watching? Where are the critical levels? Are they trading in a consolidation zone? Did they break out yesterday? Are you looking for continuation? Are you looking for a reversal? And what exact levels are you looking to play off of, right? So some of my favorite things to play are failure to go higher and failure to go lower setups, right? This could be a pullback and a bounce from a level lower, or it could push up and reject a level higher, right? So those, and then, breaks of critical levels for continuation, breakouts, right? But you need to know where those levels are so you can construct a game plan around them, right? If Apple comes down and touches, 150, I expect it to bounce here. If it bounces, I'll take the failure to go lower setup to the upside, and I'll have my stop loss down here. Now, obviously, you can't always plan out where you're going to have your stop loss or your take profits, because sometimes where you enter is going to shift, but you should always know ahead of time how you're going to stop out. Like, what is your risk management strategy on the play? Okay, are you going to stop out below the lowest wick? Are you going to stop out below the critical level, like the EMA? Like, what are you going to do? Okay, you need to have that in your head. And the reason being is because having a game plan before you start trading is going to take you out of a reaction state where you're just like kind of panicking, like looking around like, oh, this looks good. You enter, then you have no idea where you're taking profit, no idea where you're stopping out. You may not even be a great setup, and it puts you into a execution state. It's way easier to execute when you already have a game plan. You know, what you're planning for is happening. You don't have to think about it. You just execute on the trade. You know where your stop's going to be. You know your take profit levels are. You know it's a good setup already because you did your research. You know what the daily, the hourly charts look like. Boom, you're good to go, dude. It's going to be so much easier to execute. No stress, no panic. Just do. All right. Cool. So, like I said, you need to have a defined risk management strategy. You need to have a defined take profit strategy. Where are you going to start scaling out? Is it going to be a percentage? Is it going to be a level? Is it going to be a dollar amount? You know, think about that. And then where's your ultimate take profit goal? So I will go deeper into all of these in the future, all these key points. You know, I'll go through like my risk management strategies, my take profit strategies, how I set my levels, my setups I take, like all that stuff. I'll have separate videos for those, but always have a plan, guys. Always have a plan. Now let's move on to our last point, which is a big one. All right. This is something that I knew, but I didn't really know when I started trading. Right. And I'm sure you've read this if you've read like Trading in the Zone, or there's another great book that's all about the mindset game of trading. Trading is really a lot of psychology. It really is. It's a lot of mindset. It's a lot of how you can handle your emotions, your emotional intelligence. And when I personally first started trading, I didn't realize how big of a piece of the puzzle your trading psychology is. It's a massive piece and probably the biggest piece of the pie. All right. And the more and more I got into trading, the more time I spent in the market, the more I realized the trading mistakes I was making, it wasn't because I wasn't a good trader. It wasn't because I didn't know when to take the setups. It wasn't because I didn't know how to manage my risk or execute orders or anything like that. It was really just because I would trade emotionally. Maybe I would lose a trade, I'd lose like a good amount of money, and then I'd start revenge trading, or I'd rush into trades, or I wouldn't stop out when I should, or I'd get greedy. You know, all these different things that you start to learn about yourself as you go through your trading journey, you review your trades, and you spend time in the market, it really comes into play. All right. So, like I said, once you master the basics of TA, your risk management, you know, identifying your high probability setups, your order execution, all of that stuff, the rest of it is going to come down to how well you can handle yourself in here. Okay. And that's the truth. It really is. You can deny it as much as you want, but that is going to be the difference between an average trader or a losing trader and a very successful, consistently profitable trader. The ones who can handle themselves mentally are going to always be better traders than the ones who are trading with emotions, right? So again, poor trading psychology is the number one reason that I see my students fail. We do a lot of work on trading psychology. A lot of our webinars are based on that. So we really try and ingrain how important it is and give them a lot of strategies. So again, poor trading psychology is the number one reasons that I see most traders fail, right? They may have the best strategy in the world. They may know how to execute orders at the perfect time. But if they're not there, if they don't know how to handle their emotions, they're not gonna make it long term. All right. So discipline, patience, and emotional control are required to be a top tier trader. You need to know when to be aggressive, when to be defensive, and when to sit out. This comes with the emotional intelligence, right? If the market's super choppy, are you going to force trades in that to lose money? No, you need to have the discipline, and you need to be able to recognize that the setups aren't great today. It's not good market conditions. I should either go small size, be very patient, or just walk away for the day, live life, go work out, go to the beach. I don't know, whatever you do. So that's really, really important. The next thing is you need to learn how to separate your trading and your personal life, and then also separate your personal life from your trading. So what I mean by this is there's going to be days that you have rough days in the market. You're going to lose a lot of money one day, right? I'm not saying this has to be a consistent thing, but it happens. And you can't bring the negative emotions and stuff that come from having a bad day in the market into your personal life. You think your girlfriend wants to hear you bitching about how you lost a bunch of money today. You think that the people are going to want to be around you if you have a negative vibe and you're down. Like, you got to learn how to separate what happens at this desk from the rest of your life. And then you also need to separate what happens in your personal life from your trading, right? You have, I don't know, something bad happened, you get some bad news, whatever it is. Dude, sit out from trading for that day if it's affecting you mentally. Go do a meditation, go do some breath work, whatever you can to clear your head if something else is going on in your personal life before you bring it to your trading, because it's just going to, cause you to trade poorly. And then it's going to even affect your personal life worse. And it's just a really bad cycle. So if you can learn how to separate your trading and your personal life, you're going to be on a much better path. Okay. I know this because I lived with my girlfriend when I started trading. And I also lost all that money when I lived with her. And I didn't separate them as well as I should have. And I would have now, because I didn't really know what the hell I was doing. And I wasn't emotionally evolved enough at the time to recognize that. Okay. So that's why I'm telling you guys, recognize that shit. All right. Next thing is have a morning ritual that clears your head and calms your nervous system. I'll have a whole video on my morning ritual, but a lot of it is really just I either run, I do breath work, I do meditation. I'll go get some morning sun. I'll drink a bunch of water to wake me up. And I rarely ever just go from sleeping to my computer. Okay. There's usually some in between things that are going to calm my nervous system down and going to get me very focused, clear, and just chill, right? You want to be chill when you're trading. If you have a ton of energy, you're anxious, you're stressed, you're not going to be able to think as clearly and execute on those trades as well. All right. And then something else that really helped me was practice mental check-ins before and while you're trading to ensure you're in a space to execute at the highest level. Right. So what I mean by this is you sit down at your computer, and going off that last point about trading in life, if you notice like you're not in a good place mentally, like you're just not in a good place, recognize that as a part of the emotional intelligence. Recognize you're not in a good place. And maybe you decide like, hey, I'm going to go for a walk. I don't care that I'm going to be 30 minutes late to market open. I'm not in a good place right now. So I'm going to go either get myself in a good place or I'm not going to trade today. All right. And that's one of those little things that really separates the people who make it long term and make a lot of money and people who don't, because those days where you're not in a good place and you sit down and you just ignore everything, those are the days you lose a lot of money. It's happened to me plenty of times. It's happened to my friends. It's happened to my students. Think about it. Just take it to heart. I know I'm spewing a lot at you guys, but just you'll understand as you go. So it's a part of the process, part of the experience. And then also check in while you're trading. If you take a really good trade and you make a lot of money, check in, see if you're feeling euphoric, see how you're feeling, because it's not always the negative emotions that impact you as much. It's also the really positive emotions. You make a good trade, you make $2,000. You may be really anxious, or not anxious, but like excited to get into another trade. You may rush into the next trade too fast. You may get sloppy because you're up a lot of money. So now you're like, the entries, it's not that good. It's like a B setup, but you're cocky and you're coming off that high. So you kind of think you're invincible a little bit. So not just the bad emotions you have to check in on, but the really good ones as well. Okay. You want to stay neutral. You want to stay mechanical, emotionless. So either way, you want to just bring yourself back to that equilibrium. And yeah, that's pretty much the gist of everything I have for you guys. If there's any questions you guys have or anything you want to know more about, just drop it in the comments. Again, this will probably be part 1 of a 2 or 3 part series, because there is a lot more I actually want to share with you guys about starting your trading journey. So again, hope you guys enjoyed. If you do want to learn more about the Driven Investors, which is our education platform, we do live trading every morning. We have 2 webinars a week. We bring in guest speakers. We have a community, and we have a ton of course videos and educational content. If you're interested in that, I'll put a free 7-day trial link in the bio. And if not, literally no problem at all. Stay tuned for the next video, and I'll see you there. Peace.